Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, January the 3rd. The year is 2021. Let's talk trading. It's time for the weekly open and gap. I hope everyone had a happy and safe new year. And it's time for us to see what's going on in the new year. But first, just remember, this year, just like last year, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. So if you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And starting the year off right, and I hope you ended it right, but in case you didn't, I want you to start the year off right. Risk management. Don't allow yourself to lose any more in any one trade than you're willing to lose on that trade. Make sure your stop loss and position size is adjusted to your risk. Simple equations here, nothing difficult. Also, in the brain management, no fear, no regret. We talk about these things, on and off almost at least a couple times a week. So let's just make sure when we trade, no fear, no regret. And of course, on the money management side, remember, take that profit before the market takes it back, and it can take it back in a blink of an eye. One way, if you want to try and hit the home run, is you can always take half of your profit off the table and move your stop up to break even or break even +1. That way you lock in some profit, and then you have what some people call a free trade. Or you can just simply move your break even to +1 after you're up by 5 or more pips. That way, if the market continues, you're still in the trade, and the worst thing that can happen, hopefully, is you get stopped out at break even +1. But just remember, the market smiles upon you, it's lucky. Because as I mentioned before, if you buy, the only way you're going to be able to sell for a profit is if there's at least some other trader or traders out there that want to pay more for it than what you paid for it. It's that simple. Okay, so we've got the looking at the weekly open here. You can see all the gaps have filled. So it looks like the gap traders are off to a good start. Doesn't look like there was too much of a gap here on the pound. We had a close at 47 and an open at 60. Oh, well, 13 pips. You can make a living off of 13 pips. First day of the year. And actually, right now I'm on a different account. And so this one actually has a Sunday candle. I should probably switch over to the other account that doesn't have a Sunday candle. And you can see here the yearly open, we're 32 pips above it. But because I have a Sunday candle and they've already switched over to Monday on the server time, you can see my local time versus server time. We've got a difference here already on the month and the week and the day here. And that Sunday candle's almost always going to be an inside bar. So once again, I'm going to need to switch back to the other account to do these, because I think most of you probably don't have Sunday candles. Or I don't know, to tell you the truth. So if you're watching this video, drop in the comment whether you have if your broker has a Sunday candle or not. I'm just curious how many people get stuck with that Sunday candle. In fact, in some of the indicators, I've gone back and I made some modifications where you can will ignore the Sunday candle. because when you're running your frequency distributions, especially on a daily, that Sunday candle can really throw things off. Okay, so you can see we got the weekly open. We had the pivot point here. This is interesting. Once again, it's like something's thrown off here. What day is this? So looks like the weekly open should actually be down here. Might have to switch it. I'm gonna have to switch accounts when I do these videos. This is not looking good. Okay, so we have enough range so far, 42 pips, to go back and forth. You can see we had a high 36.98. Price is pulled off by 15 pips at the moment, but I knew it was down. It already had dropped pretty deep. It's kind of kicking myself for not taking a short, but I was doing a few other things here. And in fact, you probably noticed that my New Year's video was a little late because from Thursday through the end of the night, I was pretty busy. I had some things I had to take care of. It included some travel, so I didn't have a chance to post. Weekly pivot point is down here at 135.91, but that's based. I'm not sure how this is gonna, if that Sunday candle is affecting this. So tomorrow I'll have to switch back over to the other account when I make the videos. Hopefully I can remember to do that. Okay, so missed pivots. So we had a couple of missed pivots here on the last day and next to last day of the year, it looks like. Wick zone, once again, on that silly Sunday candle, you can see price dipped in and came back out. And the range, once again, seeing one day ago, it's just really not giving us anything we can use. And the ATRs, once again, I'm probably going to have to go in and work on the ATR lines indicator, but it probably won't matter much because of the way it calculates, since it runs through ATR2 all the way through 14. But of course, ATR2 is probably going to be the minimum when you have Sunday, Monday, when you have that Sunday candle, you know, or added to the, or it's not added, but used in the computation of ATR. That is probably always going to be ATR2 on a Monday. But something simple here, doesn't matter whether you have Sunday candle or not. When we're talking about the sweet spot lines. Now, I alluded to something in a video that I saw, and maybe you can see it too. And we'll just start here at the left here. This candle crossed 1, 2, 3 lines. The next candle crossed one of the lines that this candle crossed. Okay? This candle crossed 2 lines, and this candle crossed one of the lines that this candle crossed. Now, this candle only crossed one line, and as you can see, price shot out of the high and broke out of the high and low of that candle. So that's an observation I actually made Sunday morning, this morning. I woke up and something told me to just start analyzing these charts, that there was something that I may be missing. But once again, here you see 1, 2, 3, 4 crosses. this candle crossed two of the lines that this candle crossed. So this candle crossed two lines here, and then this candle crossed at least one of the lines that this candle crossed. And you might say, so what? What does that mean? Well, what that might mean is when if it hasn't crossed the line and the previous candle crossed two or more lines, then when price gets to the line, then you just might want to take that trade. And you can just go through on your own and look how many times that worked out. Now, in this particular case, candle crossed 1, 2, 3 lines. It crossed one, but the high was 2 pips. But I mean, there's still an opportunity to grab. If you're trading $100 a pip, there's a $100 bill in your hand. Now, this candle here only crossed one line, and so this candle exploded out of the high. Now, this candle crossed two lines. This candle crossed a line at the previous candle, and on and on and on. So, maybe sometime I'll write a frequency distribution. Might be a little complex. In fact, it might even be a price travel analyzer more than frequency distribution. I don't know. But it's something that I'm observing. It seems to be holding true pretty well. And, nothing's going to be 100%, and that's why we have our stop loss. But maybe when you're trading, you can think about it. So you can see right here, this candle had crossed 1, 2 lines, and this candle now is crossing a line that this candle had crossed. So if you're trading these sweet spot trades, that might be something to look for, something you can use to pick up a few pips here and there. Because you really don't need to pick up that many pips. You can pick up, 5 or 10 pips a day. In fact, there's this one trader, Walmart likes to do 10, but there's another trader out there I know. He goes for about 5 pips a day. Usually, I think at the level he's trading, he's probably netting after, commission and whatever. He's netting at least, I think, $700 or so a day, which isn't bad. I mean, he's trading a little bit heavier than most people, but he's somewhere between $100, $200 a pip. But that particular trader has worked their way up to that point. So that's my new tip for the new year, and I'm definitely going to be putting that into my trading plan, looking for those opportunities. And it's one of those things where, see, once again, it's a horizontal line. In fact, I'll give a shout out to Pro. I was looking for a meter indicator that I coded somewhere, I think somewhere around 2008, 9, 10, somewhere, where there's a little meter. It looked like the VU meter on a stereo. And I can't find it because somebody else asked me to code something like that. And I already know I've written the code once. I don't feel like doing it from scratch again. And I noticed that Pro had it on his charts. So, but he says he lost all his indicators, and besides, he was giving me a jab saying, "Hey, all you need is a horizontal line anyway." It's like, yeah, it's not that I wanted it; somebody else wanted it. I was going to do him a favor. So, anyway, if any of you traders happen to know what that indicator was, I would appreciate it. So, anyway, that's it for the start of the new year. I hope everybody has a profitable day, week, month, and year 2021. And when you sit down at your trading platform, just remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here first time, come down and subscribe, click the bell, share the video, and this is TheRumpledOne.